data.
Good morning. Euro US dollar nudges higher on the day, Scotiabank. Futures pointing to mixed open on Wall Street. Bay Street likely to open higher on firm commodity prices. Ron, good morning. RJ Nabisco. RJ. Ronnie. It's been a long while, huh? I'll make some coffee. We'll start in like 8 minutes. Right around when when the news desk gives us an update, we'll start then. Yeah, what did you do? Spend 7 years in Tibet? got hot in my office here. I left the door open. I mean, cold. It got cold in my office. I left the door open. Pound regains upper 1.27. Scotiabank.
Mexican peso remains firm despite soft inflation figures.
All right, Ron, how about this for a title for your book? 7 Years in a Turkish Prison by Ron J. It's kind of catchy. It's like an action drama thriller. Knuckles. Can't believe I'm cold. Yeah, probably, Abdul. Part of their plan. Oh my goodness. Yeah. Yeah, just the season, Ron. It's all part of the cycle. But here we
Oil
go.
prices
Here's the
rise
update.
as China eyes monetary easing to boost growth. Gold prices higher as Syria, South Korea. Turmoil supports haven demand.
Pound regains upper 1.27. Scotiabank.
Mexican peso remains firm despite soft inflation figures.
Euro US dollar nudges higher on the day. Scotiabank. US dollar Swiss franc price forecast recovers from lows. Bulls target 0.800.
It's all about China today. 3 stories are dominating.
Futures pointing to mixed open on Wall Street. Canadian dollar, Trump repeats tariff threat. Canadian dollar firms. Scotiabank.
Oil prices higher. Markets weigh Syria tensions. China data.
All right, so I guess we'll get going. What you're looking at here is a new service. It's on the TRADARS YouTube channel. There are similar services out there like it, which costs only $2 or $3 or even $400 a month. TRADARS is running it on the YouTube channel for free. So I'll give you that link. Every week there's a new link, so this is a new link. So please zip over there. Make sure you're subscribed. Click the little thumbs up button while you're at it. Cool. Okay, so hey, let's go through the basics here. Step 1, get yourself an ECN. I like Traders Way. They're good people. They're fast. They're affordable. It's clean. They don't spam you. Just clean and organized like an Apple store. Traders Way is the Apple store of foreign exchange trading. Yeah, but honestly, you need an ECN. Trust me on this. That means they have a symbiotic relationship with you. There are other ECNs. There's not many, but there are a few others. Check them out. I suggest you start with Traders Way, do your due diligence, see if they can earn your loyalty and respect like they earned mine. And then once you have a solid execution partner, then you need a research platform so that you know what to trade on your brokerage, right? So you need to know fundamentals, you need to know technicals, and you need to have a team helping you, like a technical analyst, a fundamental analyst. How about an economist? Can I please work on your team with you? I'll be your chief economist. Cool. Well, that's how TRADARS works. Think of it as a Bloomberg terminal for retail traders and investors. We're going to use some of the tools today. Under performance coaching, we had a session last night on Sunday. And then this morning we had a session. Okay. And then now we're having a session. And then today, Peter's doing some stock trading. Please RSVP. It looks like we have 50 people RSVP'd. Very cool. And then we have a CIA meeting at noon. And then I have a board meeting at 1. And then when that's done, which ends at 4, then I'll go straight to the day trading group that starts at 4. So I think I'm going to have snacks at my desk, or I'm going to get cranky. But look at that. All that performance coaching. It's incredible to have these resources. So anyways, I hope you decide to treat your trading like a business. Okay. So CAD is still weak. And yen is plausibly, remember these are based on macroeconomic analysis, like yen can still be strong. Somebody said here in the chat that they're selling yens today. Well, I covered the Commitment of Traders report. How many people here have reviewed the Commitment of Traders report? It came out on Friday, so you had all Friday evening, all Saturday, all Sunday. I covered it this morning. How many people have actually done it? Huh? It's okay. We can publicly shame those that are not doing the work. It's okay. They need it. It's needed. If you're not doing the work, you have to wear the dunce hat and sit in the corner. Yeah. Therefore, you don't ever make that mistake again. Huh? Yeah. So anyways, you may look at, so I forget who it was, but we'll just leave it at that. Somebody said that they were selling the Japanese yen today, and that might be great. And maybe the yen pairs are going up. Okay, fine. But if you had looked at the COT data over the last 2 or 3 weeks, I think really 3 weeks, you would probably be cautious at doing such a thing. Oh. Okay. So you see some bounces here. Okay. And maybe that's good. And so I did all this last week. So maybe you're thinking about it. Thinking and stinking about it. Now, Aussie, I'll give you a maybe on that. Okay? If I asked you why this happened, and you gave me a very particular answer, I'd say it's okay. If you don't know why that happened, then forget about it. That's a sell. Okay, that's a sell. And then you can go out a little further here. And so you have to very, very specifically know why that green candle occurred. Okay. Otherwise, I'm getting my drawing tool set up. Hang on, it should pop out. There it is. All right, so I'll tell you what. Okay. This is what the technicals say. So to the person who's buying yen pairs, I would disagree that you should be selling yen, because I think that's what the person said. I understand the Aussie move, and it's not necessarily yen. But if we were going to just do technicals, I think that's still the likely outcome based on technicals, but also based on flows. See, the COT data shows you capital flows. And if you're trading, let's say up, you're trading against hedge funds. Like nearly all of them. Okay. So you have to be cautious, but I can see some of these are better than others. So I covered this last week. So okay, well, maybe you're trading that as a stabilized area. Okay. But you better be able to explain that to me. Not just, you bought it. Okay. So anyways, yeah, okay. Yen pairs. Okay. Is euro that great? Is it really something you want to own? I'm interested in your answer on that. Otherwise, if you were going to trade it, let's say I can argue that yen is going to be, euro is going to be weak, and I could argue that yen is going to be strong. I don't know if that's true, of course, but I could argue it. I could give you some facts. Now, if I'm on that end of the team, right? Then this is how you would plan that. Okay, I would look at, this is the monthly sell zone. I would look at the 2155 as a dynamic. So one is fixed, one's dynamic. And I see yen's up, which is fine. And then we take it down. I could do it. So if you're long and strong and you bought the triple bottom on euro, okay, I see it. Good. What else you got? And are you selling all yen against everything? What about CAD? Okay. And you'll notice that Kiwi and Aussie have spiked a lot more than the Canadian dollar against the yen. Why? If you don't know why, you shouldn't be on these trades. If you're just following along, okay. So how about this? Why is Aussie and Kiwi doing better than the Canadian dollar? Yeah. Well, we got to be specific. Yeah, there we go. I'll go with that. That is true, Richard. Yeah, that's a whole nother thing. But I wouldn't say it's the interest rate differential, although that is something that I agree with you. That's quite real. That the Bank of Canada finds itself in a world of hurt and it has to slash and burn interest rates. Okay. But really, I think what I want people to know, additionally to that, Richard, is that over the weekend, China issued a plan which is essentially stimulus. Okay, there's more than one component, but it's serious. And some people are even calling it, sort of like they're preparing to be tariffed by Tariff Boy. So, it's a first move or whatever, but they're doing something. That's all that matters. So maybe the economy won't slow as much. Maybe the Chinese consumer comes back. Maybe real estate stabilizes. Maybe. But doing something is more productive than doing nothing. And so if you were going to translate that piece of news into a trade, yeah, you would focus on Aussie Kiwi. CAD has a central bank meeting, which is likely to lower interest rates. Their economic situation is quite a mess. Their political system is probably kind of a mess. I don't know. Canada's complicated. Nobody likes complications. So anyways, so be careful with the yen. We also know the flow is amazing. So when you look at, again, the COT report, it should give you some pause to just buying yen pairs. Okay, you could be right, but we're always interested in probabilities, right? Sorry, it looked like I just received an email that I sent out a week ago. I'm like, wait, what? And then that doesn't seem to be right. So anyways, that's good. I don't know if you're talking about China or Canada, Richard, but my concern is the Canadian economy just looks like it was mismanaged. It looks, from my point of view, of just incompetence. So to me, it's terrible. I'm Canadian. I have love and pride in Canada. I have family in Canada. I have my childhood memories are in Canada. Like I love Canada. I love telling people I'm Canadian. I just now don't want to talk about the economic situation or the political situation. So I'm just like, yeah. So I tell camping stories. Yeah. All right. So, anyways, trying to climb up here. Go out to the daily, see where we are. Okay. Pound is doing probably a lot better than, Europe. But look at where we are now. Right? So this is my area of caution. I already have it marked out from a few days ago. And so I'd be very cautious of this type of potential, huh? And so even if you're a bull on this, you got to be very careful around there. You just have to. Yeah. Yeah, okay, let's do the commodities. Okay. Mm-hmm. So we go out to gold. Here's the old plan. And it worked out quite well. Came down to the mean. Okay. So now what? Can it continue? Yeah, you have to have some rationale for doing this. I think tomorrow will be much more interesting. If it makes a higher high and then you come down and buy a higher low, you could flip this pink zone to a green zone. And then attack this high to see if we can get to that high. And in that case, we would be able to adjust this way. Okay, and then you can do the parallel equidistant kind of thing. Oops. Equidistant. Let's do it this way. And you would predict it to move this way. Okay, are we there yet? No. So I'm going to wait to see if this is a trap and break. So a dip tomorrow could be fantastic. Okay, but that means you have to be very patient and disciplined. What are you going to do? Buy it up here? Like, dude, you can't buy it up there after this giant move. Like, oh my God, right? So if you've missed it, you missed it. Okay? And now you have to wait your turn. See, in this time frame, after the breakout, you could draw this. But like, dude, this you should know when to trade gold. It's in the training course under day trading. Okay. And you can see the timing of this is pretty straightforward. Like, what do you do with a higher high? You buy a higher low. So now, anyways, now we're way up here. And I'm really thinking about tomorrow, rest of the week, rest of the month kind of thing. Could be very interesting. Okay, so you want to start measuring potential Fibonacci areas. You might want to look at daily, weekly pivots, this kind of stuff. So I think the second one is the more interesting one, which is tomorrow's central pivot. And then when you flip this, if you know your pivot points, if you know your pivot points, then tomorrow's buy zone, according to the high now, is here. But if this goes a little higher today, it'll end up being, probably this area. And so in the next 12 hours, what'll probably come together is a trade that looks like this. And then somewhere between 12 and 18 hours from now, you're long tomorrow. You see? Yeah. You guys okay with that? Okay, so you should be developing tomorrow's trade plan, huh? Yeah, for sure. Anywho. You could pull it up. Okay, you could pull it up on the scorecard. Okay. You can pull it up on the forecast. Okay. So all I'm suggesting is, you know, that's all. Remember, you should always be planning things in advance. So if gold is taking off now, well, where were you on Friday? There are a lot of people that love gold and are making good calls on gold and everything. And they're asking about seasonality. They're asking about, central banks and all that kind of stuff. Yeah, good. So you should be in the market for buying dips. Okay, so like for, 3 months now, it seems to me, like going back to the scorecard, for months now, what I've been expressing is that September is a bottom and we go from trough up and through and above. So the relative direction of gold is up. It's just one part of the analysis, but you can see seasonality is a bull and technical trend is a bull. So I covered this at non-farm payrolls on Friday. I covered this, the swing trading group on Thursday. Like, none of it is new news. It goes back 60 to 90 days of that's the direction for various reasons, right? 86% of institutional investors are long. Cool. So what that does is when you get into now price action, all you have to do is buy higher lows. Okay? So you look at like, is that a higher high where we are up here? Yeah. Cool. So what do we do now? Buy a dip. That's it. Over and 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 over until it stops working. So why would a central bank buy gold? Well, yes. I suppose that's one. What if it was a closed economy? Yeah, so that's the other side, Jim. So they're kind of the same, but they're different, right? As they say in Canada, it's the same, only different. Yes, it does weaken the currency, in particular if the money goes into the international banking system, the interbanking system. Well, if you're China, it's not so easy, right, Jim? That's all. That's why I think about that. So, what if China was buying? What is the goal of China? And it has to do with Richard's answer. What does that do? I mean, I think your answer is right, except in the case of closed economies, right? Yeah. Boost asset prices. Sort of, because now you're going back to Jim's thing of weakening the currency? No. Over time, maybe, yeah. But what's the short term? Think really short term. Why would they suddenly do it? Imagine like one day the central bank's not buying gold. They have a meeting. They discuss some situation and they're like, well, we think we should buy gold. So what is it like? What is it that they're trying to do? Why hold any physical assets? What if it was silver? What if it was platinum? You have to think about the balance sheet. Think about the balance sheet. Go from there. Gold is much more rare. No. Well, again, Jim, it's kind of the same thing. All right, hang on. What do they give up if they increase their holding of gold? Something has to decrease. No, you're jumping steps with inflation. Okay? Yeah, they give up cash. So gold goes into the vault, cash leaves the vault, cash enters the domestic economy, and where I'm kind of going towards is not inflation. That's down the road because they're worried about disinflation or deflation. Yeah, I read that, David. Yeah, I think they got a long ways to go before they get there. Right, but yeah. But nonetheless, what they're doing is they're increasing the domestic money supply. Remember, it's not really entering the interbanking system because they're not an open economy, but they are trying to give more money into the hands of the citizenry, who can then, spend it. And when you spend, you're consuming goods and services. So farmers will need to farm more food. Factories will have to build more, fidget spinners. And, Shanghai Disney has to sell more tickets and have, whatever. You see, and it's trying to make it easier to spend. And many of the population of China, they're not spending, actually. They'll go to a restaurant, but they're not buying Gucci bags anymore. So, I don't know. They're trying to turn that corner. Now, many said inflation or devaluation of a currency. Yes and yes, but it's not really the devaluation of currency. They didn't say, let's devalue the currency. So that's why I'm like, no, I know what you're thinking. But again, if I'm thinking China, then that's not the best answer. The second thing is inflation. Well, I don't think the People's Bank of China got together and said, you know what we need? We need some inflation. So what is it they need? They need consumption. And consumption can lead to an increase in CapEx, which we call I. If the government spends some money, then that's G, right? So if they can make sure it's easy to get money, then consumption goes up. Okay? If consumption goes up, you have to fire up the factory to full capacity. You need to invest some money, or you need to buy more trucks to deliver, or whatever. So C goes up on consumption. Therefore, businesses will feel more comfortable investing money. And meanwhile, the government is initiating policies because they want this activity to happen. So G goes up. So, okay. So nominal and real. Okay. Y bar and Y star, nominal and real, also go up. The government is changing policy and spending. Now, I'm being loose here. There's both government and central bank. I'm kind of putting them together to increase C. So I increases, and therefore by the end of 2025, GDP is higher. Now, if GDP is higher and consumption continues, this investment goes to fruition. So now the factories are bigger, or there's more factories, then they're going to need natural resources to feed the beast of the consumer. Okay? Now, we're not even doing X minus M, because I'm just talking about them domestically. Because if they do all this, this will not make France rich and fix their political situation, is it? No. Is it going to fix the UK? No. Is it going to fix Germany? No. Is it going to allow exports of Chinese electric vehicles to the United States? No. So that's why I'm like, they were not trying to create inflation. They were not trying to devalue the currency. Hey, if they make the currency a little bit cheaper, it's not going to make a German buy a Chinese electric vehicle over a Porsche. So there's no need to mess with that. So they're focused very much domestically. But that could lead sometime in the future for an increase in the demand for raw material. And therefore it leans toward maybe in the future, Australia does... let's be polite. It will be better off. Yeah. Yeah, David, that a lot of that gold, well, first of all, is theory. So who knows? Maybe it's clickbait. But it was also very, 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 very deep. And, I think Mexico is in a similar situation, David, where they have lots and lots and lots and lots of gold under their mountains. Mexico has a lot of mountains, right? And they have a lot of gold, like huge amounts of gold under them mountains. Thing is, mountains are expensive to remove. So, I remember reading about that, I don't know, probably 20 years ago. And the issue is it costs, let's say, twice as much to harvest than you could sell it for. So it's like, oh yeah, Mexico has unlimited amount of gold, but it costs $5,000 an ounce to get. Well, put that in the parking lot. We'll revisit that later, right? And I think, this deposit that China found, it's so deep. I don't even know. Do we have the technology to go that deep and mine it? Or what are we going to put people down there? Yeah, I don't know. One thing you could do, David, is so South Africa produces gold. What is the deepest gold mine in South Africa? And then you find out the one in China is 3 times deeper. You're like, well, why did South Africa stop at such a deep level and not go any further? It's probably very difficult for humans to survive. It's hot down there. Yeah. So, how far can a human dig for mining? That's a good question. I don't know. So, do we have to develop robots to go down there? And, You know, are we basically, is it going to be an inverse space race? Like, who can dig the deepest? Yeah. Yeah, it is hot down there. Oh, I know. Yeah, that would be cool. I would do it. You know, but yeah, illegal mining. But like Tim, I'm talking about very deep, very sophisticated. So imagine you had to go as deep for gold as we go deep for oil. You know, like how do you even, can you even build the infrastructure to send humans down there to get to the gold? Or is it just like, okay, we're going to send robots down there, you know? And while we don't have gold mining robots yet, but hey, if somebody tantalized you with, uh, you know, $1 trillion, you're like, yeah, okay, I think we can send a Roomba down there, you know? Yeah. So, anyways. All right, let me update what I want to see here. Key levels pass, fibs pass. Yeah, see, I like just being a simple. I'm just a simple Canadian boy. I just want trends. Okay. You know, it'd be another great tour is like Tesla should say every time you buy a Tesla, you get a free trip to the Congo to watch 100,000 children illegally mine for cobalt. Hmm. Right? Can you imagine? You get there and there's like they have in America, like today's safety record, you know, only 37 children died today. You're like, oh, that was a good day. Yeah, that was a good day. Whew. Hey, yeah, that's 12 days in a row with less than 50 deaths. It's pretty good. Pretty good. Yeah. Oh, that's hard, right? Yeah, yeah, yeah. But I'm just telling you, if you've ever seen what's going on to get you your Tesla, holy smokes. Hmm? Your ponytail would stand on end with fright. All right. So any Brenty down, WTI down, weakness, threat, triangle, non-directional. Okay. So we had that pop in oil, but I'm not into it, man. I don't think so, huh? Yeah, Jordan, you should see the. There's a great. There used to be videos on YouTube, anyways. It's incredible. The illegal mining of cobalt. And when I say mining, it's a 12-year-old with a bucket and a shovel. It's dangerous. Yeah, very, very dangerous. Uh, 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 um, Should we look at crypto, or is it just out of control? Is that right, Nickel? Where is that? Like the second largest nickel mine in the world is in Hamilton, Ontario, and it's very sophisticated, obviously. Pretty sure we don't send our kids down there. So nothing going on here if we're going to do trend stuff. Okay. Quit your whining, eh? So are we going to have dollar weakness? Oh, wow. We got a lot of news this week, and there's a couple of things going on in my mind. I mean, there's lots of central banking things, and I think most Western central banks are scared, right? So there's like that slash burn. Is that good? I'm worried about rotation and rebalancing being a key theme. If not this week, maybe before or just after the Fed. Then, of course, the Fed meeting. So when we normally look at these markets, we say, okay, risk on U.S. dollar weakness. And so I look at like this euro dollar and then some weakness, and Aussie dollar, some weakness in the USD, up, up, up. I'm just not sure if I'm capable of fully believing in anything until January, right? One of the things I talked about at the fundamental meeting this morning is just portfolio managers forced to make trades as just a process of managing your portfolio. It's just required. It's just farmers have to harvest, portfolio managers have to rebalance and rotate. And it's going to happen between today and the 31st. And what are some of the catalysts, which is catalysts? Well, definitely that Fed meeting. Maybe it was NFP. Maybe it's going to be CPI, or a little of everything. And so, boy, oh boy, are these trends? Even though these are trend patterns, am I actually trading a fundamental trend, or am I trading sort of a slide in a slipping and sliding of asset prices around rebalancing? The mechanics, the invisible forces of the market. So like a retail trader doesn't know anything what I'm talking about. What the heck are you talking about? But if you're a $1 billion hedge fund or publicly traded fund or something else, like this is going to happen this month, maybe a little next month, but there is still stuff happening. And so I'm like, okay, is it macro or is it the technical mechanics, not technical charts, the mechanicalness? Is it the clockwork, the sprockets of the markets? And so like, okay, euro dollar up. So then I fall back onto, what do I know? Do I want to own euro? Not because it's doing well. Maybe it's less bad. Maybe they only cut by 25 basis points, right? Now, yeah. And Canada's going to cut by 50. Okay, so Europe is better than Canada, right? Well, they're both in bad situations. So technically, okay, could you buy dips here? Yeah. Am I going to hold? Do I think that's going to be that? Well, this is what I'm normally doing. Sure. And I do like the congruency of, dollar weakness, dollar weakness, dollar weakness. Okay, cool, cool. But there might be other themes like just sell the Canadian dollar. It's a mess. Okay. There are signs of nice little risk on, right? Even when you go farther out, rising wedge, do you see? You know how to trade these, right? I don't have to explain this to you, Lucy. Okay, all these different things. Beautiful little play. Okay. Notice that it's on the lower time frame. So, like, look at Aussie. Aussie's been a dog with fleas. And all these other dollar pairs say up. This still says down, you see? So I need a lot to happen before I'm interested in Aussie dollar, although I like the narrative. The zeitgeist. Do you guys like throwing words like that into casual conversation? Zeitgeist. Yeah, it's good. Right? Yeah, Aussie could do it for sure. Although, Well, no, Aussie's been weak for a while. So, when you look at this chart, well, it is bearish. But I'm very interested in the future, but that doesn't mean I have to buy now. Now, I could buy it based on the news or something like that. I would still prefer, if not on this, this time frame, at least smaller ones and tiptoe in there, but realize even if I'm buying a dip here, which would create kind of like an inverse head and shoulders type scenario, okay? I should still recognize that on the higher time frame, it's not bullish yet. It could be, it might be, it probably will be, but none of that is real until it's real. I'm hoping that on these smaller time frames where you see like euro dollar up, I'm hoping that translates and the stock market continues to rally. And I'm okay with that as being a bottom, but like this is noisy over here for a high. The bottom's fine, the top not so much. Okay, 15-minute, we probably just don't see enough here, but you could buy a little dip. In particular, not just because Aussie dollar 15 has somewhat of an up, although look how close we are to the apex. The closer you're here, the less likely. But on top of that, what are you trading? The new news or this pattern? Well, maybe the new news, but the pattern does suggest we're closer to an end. So, it's tricky. It's up. It's not a sell. We know that. But it's not the world's greatest buy. So you're going to need to incorporate some other stuff in there, right? Same thing with Rand. Rand is doing well when the dollar's falling. I think we had a sell at 18 one time. Not this time frame, a much higher time frame. So you had your chance. And now what? Well, again, too little, too late, close to the apex, all that kind of stuff. But if it means the United States stock markets go up and the USD weakens, and we actually have some wonderful correlation, like the dollar's supposed to be weak, even though it's been strong. So, okay, cool. Okay, pound looks okay. But once again, if you look left, I don't think it's as clean as the tip of the spear looks. Okay, cool. Peso Okay, that looks fine, but it needs to rise before a fall. Okay. So, on this Monday morning, it looks like, I don't know. Yeah, like this is one that I talked about a couple of hours ago. Pissy might be interesting. Okay, looking at the pound on the higher time frame could be interesting. Okay, but that means they take time to put together. Let's quickly look at the stock markets. We'll look at the live market, and then I'll let you get out there. If you're in my CIA, we are going to rebalance and rotate today like professionals, because the Council of Investment Advisors are professionals. They are trading real money. They have a real track record, and they've learned how to invest into the stock market, not like a trader, but as an institutional investor. And we're wrapping up our first year. We're going to do a quick meeting today because we have some cash to deploy, and really a rotation that I'd like to propose, and then we'll have a resolution and then make the change if you guys vote on it. And then in early January, we're going to do our party, because not only will we have 12 months of performance, but actually 2024 performance, so an actual year. And that's worthy of some champagne. Yeah, so we'll do the party in like the second week of January. We'll meet and do that and celebrate the success. Yeah. So I want to make a change. I'm not going to make an announcement today, but one of the things I do want to work on is making the CIA more accessible. How many people here actually want to learn how to invest and manage portfolios as a professional and have a track record? My track record becomes your track record because you're making the decisions along with me. And we did very, very, very well. We had a fantastic year. So if you joined a year ago, you would already have a fantastic trade record for investing into the stock market. Yeah. Yeah. And it's the same portfolio that I've built for, charitable endowments. So let's say you want to manage an endowment like I did. You'll learn how. If you want to manage your retirement account, you'll learn how. If you want to learn how to be a professional and understand how the stock markets work, this is what we spend a lot of time analyzing and talking. You'd be surprised, I think, how sophisticated our CIA is. Yeah. So one of the things that I want to work on today with the CIA, and we were talking about this last week on one of the webinars, but it is funny. We are too conservative. We did extraordinarily well. We have a very high income level, and we were too conservative. So I want to make some tweaks today and discuss that with the team, because I'd like to take on more risk. And my hedge fund buddies that I mentioned this to, they're like, dude, that is just the strangest thing ever. Because everybody analyzes their portfolio and like, how do I reduce risk? How do I reduce risk? Our beta is 0.1. You can't be, that doesn't even make sense. And then our Sortino ratio is well over 8. It's 8.5. You're like, dude, that doesn't make sense. So it'll be interesting because I'm a little worried next year's not going to be great, and but I want to find the right balance, right? So, anyways, it's going to be an epic conversation today. Yeah. Yeah. So, anyways, you guys should be there. I'm telling you, it's legit. All right. I will let you go. Have a wonderful day. CIA members, I will see you at noon. I have a hard stop at 1 because I have a board meeting. I was supposed to be in New York City today, but I canceled it. Yeah, so I'm here, but I do have that hard stop, so I got to go to that. And then soon that's supposed to go to 4, and then so as soon as that's over, I go straight into the day trading group. What a day! No rest for the weary, huh? Yeah. So, thank you for letting me be on your team every single day. Don't forget, Peter Ward has his presentation on stock indices today. Right? When is that? 11:30? Check the schedule at traders.com. I sent you an offer about a week ago for you to upgrade your account and be an annual member but pay monthly. So if you have conviction but not a lot of cash, make it easier for you. Peace on earth, may the pips be with you. May your profits be above average. I'll see you when I see you. Cheers.